Hi everybody. Today I wanted to showcase the Wall Street Courier Dashboard. As you know, we are living in very volatile times. You need to have the most up-to-date information on the markets. So I'm going to show you what this thing can do. So if you log in the Wall Street Courier Premium, you can look at the big picture. Let's start with that. This gives you an overview of the markets, global markets, and you can see, for example, here that we are still in a very high reward status, so stocks should be going up in the long run. But in the short term, you can see that there is some downside volatility. If this goes to red, watch out. So this gives you an overview of the markets, and you can also look at different sectors. There are two regimes, tactical and strategic. This is long term, this is short term. For example, here you can see healthcare, utilities are still in the green, but some other sectors are in the red. So these are high risk, these are low risk. In the long term, it's still looking fine, okay? But this could roll over very quickly. You can also look at the performance here, short term, mid-term, and long term. For people interested in gold miners, you can also look at this here, and it's actually looking good in the long term. Real estate looks very good. We are in a disinflationary period with yields going down. That's good for real estate. Energy is not looking that good. You can look at these dashboards and make your decision on the different sectors. This is also something I like, Smart Money Flow Index, which gives you a leading indicator for the markets. And it has not been doing that great lately. From 18 July onwards, it has gone down. So this might be a sign that there is a correction coming in the stock market. So interesting widget. The Wall Street Courier Capitulation Index, a very useful tool. Each time that you see this going into the red, then you should see a correction. You can look at different examples here. Here it went into the red and stocks went down. Into the red, went down. Okay, red went down. Whenever it goes back into the blue, then you should buy. Okay. For example, here going into the blue, it goes up. Here goes into the blue, goes up. So also very useful to time your market buys and sells. So this is the big picture. Use it all the time. You can get into all the different exchanges and see more of the indicators. There are a lot of indicators, technical indicators, fundamental indicators like smart money, bull, bear, McClellan. So you can look at all of that. But what I like the most on this Wall Street Courier dashboard is the COT reports, because that's where the smart money goes into. As you know, COT report has three different groups. You have the commercials, small traders, those are the dump money, and then you have the large speculators. These are the smart money. These are the funds and the family offices. So these are the trend leading groups. So you need to follow these ones. So let's go over all of these different things and give you examples how this has helped out. You can look at currencies. You can see it clearly that whenever we are in the plus, then the Australian dollar went up. And here, whenever we go back down, then the trend is down. So it is working very well. Here as well, when we have short-term downsides, you see that the British pound went down, here up, and it has done very well lately, the British pound. So these are very useful indicators. Here we know that Canadian dollar was at 0 on this Wall Street Courier index, and the Canadian dollar has done very poorly. So this is giving you the trends. Here, for example, blue line went very positive and euro went up. Here, blue line went very negative, euro went down. Back positive, euro went up. And today we are in a regime where the euro is probably going to be weak. Okay, so we are not in the euro currently. Japanese yen, amazing, right? Negative went down. Here some volatility, back up. And then here we know exactly that the yen was not doing well and we were out of the yen. Yen has cratered, and now actually you see that smart money is buying back the yen. So this could be yeah, if you actually looked at this here, you could have bought here the yen, and the yen has gone up ever since. Mexican peso, smart money actually knows about elections, and here we had the election. Smart money went out of Mexican peso, and it has since dropped. So this is really amazing, this COT report. We have the Swiss franc, we have the US dollar. US dollar is a little bit stronger now, probably due to recession coming, and then you probably have a stronger dollar when stocks crash and everyone gets into the bonds. There will be some strength in the US dollar. So that's where this is coming from. So that's currencies. We have energy. And on the energy side, you know, I have been bearish energy for a long time. That's because we have smart money, which is very bearish. As you can see here, it's below 50 means that we are bearish. Latest data is going back below 50. So this could keep on dropping. So I'm not into energy. Natural gas is a bit better, but yeah, it's still around 50. I don't think natural gas will go anywhere. It's going to hover around 2 to 3. Heating oil weakening. Short-term indicators. So there are 3 different indicators. You have the short-term, mid-term, and long-term. Short-term is, I think, the most important one because this gives a trend, and it's below 50. So heating oil probably going down, unless, of course, something happens in the Middle East. We never know. Something could blow up there. But fundamentally, energy is pretty weak. You also saw that in the big picture, energy was at the bottom. Agriculture, Wall Street Courier has given us data that agriculture is to be avoided. So we have avoided this sector. You can see here, everything went down and it's very weak. You can see corn going down. So the smart money knows exactly where to go, and they're shorting the agriculture markets. Still 0. This is going lower. Oats, soybean meal below 50, lower. Soybean oil lower. Soybeans lower. So you can see clearly the trend is lower. Wheat also very weak. Here also very weak. Wheat, different wheats, and all of them are weak. So we are avoiding the agriculture sector still, and agriculture and energy are closely related. So this reinforces our view that we should avoid these 2 sectors. The VIX We also have some VIX smart money indicators. This is short term, it's negative, but long term, it's bullish. Yeah, this is a pretty volatile indicator. But lately, we see a little bit of a jump in the VIX. So I would say, yeah, this is going higher, meaning recession is coming and we will see unemployment spike, we will see stocks crash down. So that's where this is coming from. Dow Jones looking flat, but it's weakening. Going to the 50 area. This is probably not going to go up too much. Nasdaq is weak. We have been avoiding this sector as well, and it is going down. Nasdaq 100 below 50. This is going down. A lot of indicators here. Nikkei, we knew how to exit because smart money was exiting here in June already, June, July, and it had a dead cat bounce and now it's crashing. So this WallStreetCourier dashboard is really useful to me. You can see clearly where to buy and to sell. Lately, smart money has started to become more bullish. And the S&P 400 is increasing, but still below 50. S&P 500 flat. So this is going to be flat. And yeah, this is the indices dashboard. You also have livestock, but I'm not interested in that. Metals. This is most important for me because I'm invested in that sector. I think copper is going to be very weak, and smart money finally sees this. I have already been saying since here that copper is going to be weak, and now the smart money is following. Look at this, it's dropping. This is the latest data. It is almost below 50, so I expect copper to drop even more. And smart money, probably by next week, this is going below 50. So the trend is down for copper. Gold, okay, still above 50. It was very bullish, but lately smart money has started to become a little bit bearish, but it's still in an uptrend. So going up, but not as fast as before. Palladium, yeah, you can see it's always almost at the bottom, zero. Some dead cat bounces, but lately it's back to zero. So Palladium, I expect this to keep on crashing. Look at this. This is extremely bearish. The long-term indicator is extremely bearish, as you can see here. So WallStreetCourier is telling us that Palladium is going to go much lower, and we are not invested there. Platinum, the same, but it's a little bit better. It's not at zero. Still below 50, so it's probably going nowhere. Silver is a difficult one. Still above 50, so this should actually move higher, along with gold. But it is a very volatile sector. Then we have the rates. Do we have a rate cut or not? You have the 2-year note here, and lately we see a rise in the smart money. This means that we will have rate cuts because this is the 2-year value, 2-year bond value going up means that yields are coming down. So yeah, this tells me we are going to have rate cuts. Okay, smart money knows it, and the Fed also knows it. The 5-year note had a little bit of a dead cat bounce, and now it's back to zero. Yeah, Not sure what's happening with the 5-year. Probably going to stay high, but it has been dropping a bit in yield. 6 to 10 years, we see that smart money is still not bullish on the 10-year note. Might be that this yield drop might come back up. You have a lot of debt that needs to be issued, for example. This could mean that yields will stay high. Okay, so I would not buy bonds at this time. I would buy gold. It's looking better to me. Then we have the euro dollar telling us that yields, the 2-year yield will come down. So short-term yields coming down, long-term yields probably stay high. That's an inversion of the yield curve and good for gold. Okay, so you need to make these connections. Fed funds stubbornly high in yield, but I think they will need to cut rates at some point. Then we have the long-term bonds around 50, so probably flat around here. Don't expect this to crater in yields. Okay, then you have the last one, soft commodities. We have cocoa, which is chocolate, and you can see here smart money went to 0 and cocoa has topped out. So very useful, very useful. Coffee going higher and will keep on going higher, as you can see here. This really works. So as this stays in the 100, coffee went up, then the short-term indicator went down and coffee went down. Now back up and coffee goes up. So you can use this. If you are able to buy coffee or coffee companies, then you can make money with this. Cotton tells me that the retail sector is really bad. You have seen Nike drop 20%, and you can see also that the smart money is very bearish on cotton and clothing. So yeah, this is going lower. Orange juice back to 50, probably flattening out. Sugar, we were bearish here. It has gone down. So yeah, I keep on saying that this is a very useful dashboard and you can get a lot of information out of this. Just one thing I wanted to show. There is also a gold miner dashboard if you're interested in that. Has different indicators, a lot of indicators, a whole page of it. So if you want to know more about this, these are the indicators. You have the momentum indicators, trend traders, McClellan, moving averages, bull, bear, put, call ratios, even Hindenburg omens, which is something I like to watch. If there is a Hindenburg omen, then you should watch out. You can see there are still no Hindenburg omens for gold miners, so that's good. Smart money was bad and has gone positive again, so gold miners are probably a good buy. It looks like this. You can look at Hindenburg omens. If you see these things coming, then there is a crash, typically here as well, a crash. So nice, you have the seasonal patterns, presidential elections, probably a bit overvalued, but if you look at the valuations of gold miners, it's still very cheap and I would buy them. Smart money was a bit bearish. We had a little bit of a correction, but let's see how that goes. Capitulation index apparently negative. But there are a lot of indicators. You need to take all of them in account. You can see many of these indicators here. advanced decline ratio, volatility, um, McClellan volume, still above the trend, so going up. Weekly new highs, above moving average, still bullish. If you don't want to look at all of these indicators, just look at this overall chart. This will give you an idea about where we are going. There are a little bit of more red bars coming in, but still a lot of blue bars. And here some bold blue bars are coming in as well. So this gives you an overview. Okay, so that's the Wall Street Courier dashboard. Nice tool to get up-to-date information. You can click on the link in the description if you want to sign up. And I use it all the time, especially for these CO2 reports to know what happens the next week. It's updated every week. So that's that. I'll see you in the next video. Bye.